Hello everyone, and welcome back to Everything Tesla Stock. When people discuss Tesla's stock's incredible price history and buying and sell-off trends over the past 5 years, one name comes up frequently: Cathie Wood. Of course, the famed investor has long been optimistic of Tesla stock. However, in a recent interview, Wood expressly explained why she believes the stock will continue to rise and bring an end to the sell-off. Now, shares are up approximately 3% on the announcement, giving investors a lot of reasons to be bullish on the electric vehicle manufacturer. Today we're going to be talking about the reasons as to why Wood thinks that the Tesla sell-off is over, and also her predictions around Tesla's future stock price. Stay tuned until the end, since you're not going to want to miss out on this. Before we start, if you like this type of content, hit the like button, subscribe to our channel, and turn on notifications to keep up to date on everything going on with Tesla. Cathie Wood is the CEO and CIO of ARK Invest, a St. Petersburg, Florida-based investment management firm that runs a number of actively managed exchange-traded funds. Wood worked her way up the Wall Street ladder, starting as a stock analyst at asset management Jennison Associates, and eventually became a chief investment officer at AllianceBernstein. The 66-year-old star investor has amassed millions of devoted followers on social media with a strong vision, which she frequently articulates in YouTube videos and tweets. That massive technological advancements are reshaping the world, and even recent claims that the Tesla sell-off might soon be over. Tesla's small increase in price in the last week might suggest that this is true, so let's get into it. Wood heaped praises on Tesla shares during an interview, comparing the company's advancements to those with Apple. According to Wood, Tesla's EV success will continue to change the game. Much as Apple did with the iPhone, it's easy to understand how Cathie Wood's endorsement would assist any brand. Her stakes in companies like Teladoc Health, TDoc, have previously helped improve stock prices. Tesla stock is also becoming increasingly popular with bullish investors, but seeing Wood extol its virtues will prevent further sell-off of the Tesla stock. Furthermore, Wood's support comes at a crucial moment for Tesla. The company just gave updates on several new goods, with recession fears remaining high. Furthermore, factory closures in China as a result of the COVID-19 pandemic have caused Chinese vehicle sales to plummet. All of these variables combine to create a volatile market environment, prompting some investors to avoid names like Tesla stock. Other investors are more likely to adopt the same thinking as Wood, and they believe that Tesla is a profitable gamble and thus stop further sell-off. One important component of Wood's optimistic case for Tesla is the company's technology, which is way ahead of many competitors. While Wood did not identify names, she did mention established automakers, which are corporations like Ford and Toyota. In the first quarter of 2022, both companies' sales fell. Meanwhile, Tesla sales increased within the same period. Even as the recession fears grow, Tesla stock continues to prove that not much can keep it down. Now, Cathie Wood's endorsement is exactly what the company needed to reassure investors of its potential. Tesla is still the undisputed leader of the EV race, and it has the tech to stay in first place. The recently opened Gigafactory Texas will ensure that the company keeps pace with demand. Starting with Wood's early statements on Tesla, we can see that one of the reasons she likes this stock is the resemblance between the two business models, the complementing principles that drove the development of both ARK Invest and Tesla. Both are based on the assumption that rapid technological advancement provides financial growth. Both are diverse in this concept. Rather than focusing on a particular technology, they each have a wide focus and an expansive perspective. In an interview, Wood stated that she perceived Tesla as a value company, or one that was trading at a discount to its fundamentals. This is after reviewing Tesla's profitability, revenue, and other metrics. Wood concluded that the stock had a lot of room to go, and run it did. Over the previous year and a half, her early conviction was that Tesla had a lot to offer the market, and that was partly what prompted Wood to push Elon Musk to keep the company public, as he considered a takeover or a sell-off. And it was also one of the reasons ARK Invest made such a significant investment in Tesla in the first place. Cathie Wood has made several price predictions about the future price of Tesla. Wood predicted that Tesla's stock price would reach $4,000 per share by 2023, when it was trading for several times less than it was now. Remember, this was before the 5-1 split, thus the corresponding post-split share price was $800, which it reached 2 years sooner than she predicted. In subsequent months, Wood has actually adjusted this to a projection that Tesla's share price might reach $3,000 per share by 2025. That's a little more runway and a little less maximum value, but it does suggest that Tesla's got room to develop. Furthermore, last month, ARK Invest published research that contained an exceptionally positive price prediction of $4,600 per share for Tesla in 2026. Perhaps no vehicle stock in history has seen as much volatility as Tesla Inc. Tesla stock has gone from revolutionary company to social media star, as it's got its equally passionate CEO, Elon Musk. No firm has possibly typified the market's alleged speculative overvaluation more than Tesla, which has recently witnessed a spectacular fall at the first quarter of 2022. Tesla shares have fallen more than 20% since the beginning of January, as the firm prepares to report profits for the fiscal fourth quarter. Analysts estimate Tesla will report $2.36 in earnings per share and $16.65 billion in revenue. Therefore, option volatility is high. Based on the same quarter a year ago, this indicates a more than 100% rise in profit and a roughly 60% increase in revenue. Option traders appear to be betting that the recent negative trend in Tesla's share price will continue. This is because recent option order sentiment has moved from bullish to bearish as the stock price has fallen and the electric car market continues to be beset by supply chain limitations, generating sell-offs. Despite the seemingly bleak picture, analysis will continue to give high forecasts ahead of Tesla's fiscal fourth quarter reports. While Tesla has established new factories and claimed record sales of electric vehicles, analysis will be focusing on the firm's fundamentals, such as gross margin and how the company hopes to maintain its market share advantage and prevent further sell-off. Despite the recent sell-off in Tesla shares, the company is still by far the largest automotive manufacturer in terms of market value. Tesla's market valuation is approximately 3 times that of its closest competitor in terms of size, Toyota Motor Corporation. Tesla stock has fallen 22% in the last month, whereas Toyota stock has increased 6.3%. The chart below compares Tesla and Toyota's recent performance to that of 8 of the biggest automaker stocks by market cap, as well as First Trust's Global Auto Index Fund. Furthermore, it's worth noting that notwithstanding its meme stock status during the COVID-19 pandemic, Tesla was outperformed by industry heavyweights like Toyota, Ford Motor Company, Stellantis NV, and Honda Motor. Almost all of the electric car stocks, which were previously outperforming their gas-centric peers, are now underperforming. Wood sold $66 million in Tesla stock, or 67,884 shares, on the same day that Tesla reported profits. The EV company is owned by the fund manager through 3 exchange-traded funds, ETFs. ARK Invest ETF, ARK Autonomous Technology and Robotics ETF, and ARK Next Generation Internet ETF. Wood then sold another $94 million in Tesla stock, or 93,160 shares, the next day. The 3 ETFs still own 1.39 million shares of Tesla after the deal. In an interview with Bloomberg, Wood explained that we've been selling Tesla recently because of how well it has done relative to the rest of the stock prices in our portfolio. It has been a good source of cash, and we have taken profits and deployed them into other stocks that we feel have been unfairly punished. Wood has also earlier stated that ARK ETFs have a self-imposed restriction limit of investing 10% of an ETF's asset in a single business. As a result, she frequently sells Tesla when its allocation reaches or nears 10%. Tesla owned 9.36% of ARKW, 10.5% of ARKQ, and 10% of ARKK at the time of the sale. Wood recently raised her Tesla price prediction for 2026 to $4,600. The bull scenario has a great price goal of $5,800, while the bear case has a price target of $2,900. The bull and bear scenarios are assigned a 25% probability by ARK. Wood and her team think that Tesla's potential robotaxi business will be extremely profitable, accounting for more than half of Tesla's worth by 2026. Musk indicated during the company's first quarter earnings call that Tesla aims to create a vehicle in high numbers by 2024 that is extremely optimized for autonomy, implying that it might not have steering wheels or pedals. Finally, ARK predicts that under the bear scenario, Tesla will sell 10 million EVs in 2026. The investing team anticipates that Tesla will sell 17 million EVs in 2026 under the bull scenario. In 2021, Tesla will have delivered 936,172 vehicles worldwide. So, do you think Tesla's going to bounce back given all the factors and developments going on? Let us know down below in the comments. Thanks for watching, and while you're still here, go ahead and click on one of these 2 videos on your screen. See you there!